Joe Mazzola for the day, but let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder of LikeFolio. Andy, we're talking footwear ahead of Nike's earnings, but we've got CROX on the radar. We've got some other names. CROX down about 40% so far this year. But what are you seeing in this segment? It seems like it's been lost, a lot of these stocks, and basically this brand in footwear hasn't done that well over the last several months. Is that, are we seeing a turn in consumer demand, or maybe just away from brands that we recognize?
Yeah, no, it's actually one of the reasons I wanted to bring this to you guys today. It's just very interesting to us when we look at our data. Actually, the footwear segment, in terms of consumer demand, is staying very strong, even in this inflationary environment. There's a lot of places where consumers seem to be cutting their spending, but footwear doesn't look to be one of them, at least not yet. And so I really wanted to highlight for you guys, we've been on here, we've talked about CROX before. It's a stock that's been very good to us, a company that's been very good to us, and one that we really like going forward. But there's a couple others that I think maybe, our viewers here haven't really heard of. And the way that we wanted to screen for this, I've got on the screen right now, is, the further to the left these companies are, the worse their stock has performed on the year. But the higher up on the chart, the more consumers love the products that they make. And so I really focused on those stocks that have been really beaten down, but that make products consumers love. CROX is in that mix a little bit, but there's a couple other companies I just want to highlight for you guys, because we're seeing some pretty good things, perhaps some opportunity in these kind of off-label names, if you will. They're not Nikes, that's for sure. But one is ON Holding. Ticker symbol's ONON. This is a Swiss company that makes shoes that running shoes that people say it's like running on clouds. At least that's what the company claims. And they make these shoes available via subscription. And consumers seem to be really, really happy with this arrangement. 85% happiness levels for this company's shoes, which is the highest we see in the entire footwear segment. And the stock is down 37%. Year to date, it's about a $24 stock. And then on the other hand, we kind of have the dog of the bunch, Allbirds, ticker symbol BIRD. This again is an environmentally friendly shoe, very expensive, but consumers again really rave about the product and really love what the company makes, with consumer happiness over 80% on this. They had bad IPO timing last fall, and really maybe not a great company. But when I see something like this, where a company is able to create this type of consumer buzz, loyalty, and happiness, and not be profitable, I think of them as potentially a takeover target, much the way CROX just purchased Hey Dude shoes. The stock is down 68%. It's only a $5 stock. It's catching a bid today, but one to keep an eye on, I think, because again, these companies are producing products consumers love, but just results that Wall Street so far hates. And I think a lot of times that can be a big opportunity.
Well, let me ask you this, because the CROX and clogs in general, they became kind of a staple during the pandemic, because the sales jumped dramatically in a lot of these names. And I think you show in your chart the mentions are going up, and they've been ticking up recently. But boy, it sure does seem like CROX might be kind of stuck in that segment a little bit. Like, what do they need to do to gain leadership again within these type of brands?
Yeah, well, the one thing I think they needed to do is the one thing that they did earlier this year is a little bit overlooked. Their acquisition of Hey Dude shoes, I think, was brilliant. It takes them out of the just rubber clogs type of brand recognition. Hey Dude shoes are kind of cool looking, if you want to say, boat shoes that people love, and again say they're comfortable and can be produced at scale very cheaply. So I think broadening out their brand was a very smart move for CROX. I think that will pay off in a big way going forward. But the other thing, you mentioned the pandemic. The other thing that I'll say is some of those consumer preferences really stuck. We are seeing when people talk about buying shoes, they're talking about comfort. They're talking about recovery type of shoes. So they're going back to work and they're not really wanting to put on those old dress shoes again. They got pretty comfortable at home, and they're looking for a little bit of that same experience going back to work.
Yeah, Andy.
I'm with him on that one.
Yeah, Andy. And Andy, one of the things that I look at whenever I look at footwear stocks, whether it's Nike or Crocs or WWW or some of the other names in here, it seems like this is always a fickle segment. It's like you're hot one year, you're not hot the other. Is there any consistency in your data that's reflective that, hey, this is the brand that will do well in the long term? I think that's a big thing for traders and investors, that when you look at some of the data that you have, it seems like Nike was up in the in the upper end of happiness a lot of times, but it's fallen off. But maybe it's just fickle. Is that what investors have to be ready for, a roller coaster ride in this segment?
Yeah, I do think that you have to be ready for volatility. You have to be ready to be completely wrong, to be honest, especially on some of these smaller names. I do think that the comfort trend, the sustainability trend, those are both here to stay, at least from the data that we see, only getting stronger in consumers' minds, and has that look of a trend that's here to be around for quite a while. So On Holding and Allbirds definitely both fit that category. Again, Allbirds, I'm not really sure this is a great company. I'm not even sure it should be a public company, but they are producing products that consumers really love. So to me, that could be a takeover target at some point. But overall, I think sustainability, comfort, these are the types of things that consumers are talking about, and the ability for these companies to make them with stylish look and feel that look cool is something new. It used to be only Nike could make shoes that were both comfortable and cool looking, but now the technology has improved so much that a lot of companies can do it. And I think there's plenty of opportunity and risk in this space.
Well, thank goodness Kevin Hinks isn't here, because he would say that Crocs are not stylish and have no style.
No.
But thank goodness.
I will fill in on that one.
Yeah, thank goodness he's not here. He's never walked a dog at 10 o'clock at night, and you want something comfortable to slip on. All right, Andy, just real quick here, based on Crocs, it's rallied about over 60% since hitting 52-week lows July 1st. Do you guys still like this as far as sentiment goes?
Yeah, this is one that I think we brought to your viewers directly not too long ago. It's up nicely since then. We still like it going forward. It's a volatile space, but I do think ultimately Crocs is $100 to $140 stock.
Awesome. Great stuff as always, Andy. Appreciate all the data. Have a great weekend.
Thanks, you too.
All right, that's Andy Swan, the co-founder of LikeFolio, joining us, helping us break down that. I like that he brought us a couple